What's going on, y'all? Welcome back to the channel, Wealth Hacker Labs. We got another edition of One Take. No edits. We're just running through this, just giving you updates on what's going on with the market, things to know, things to expect. Man, I wish that today didn't play out the way that I thought it would. For those that are, you guys are following along, you know what's going on. Last Friday, we had a rally, nice little rally. I did a video last Friday, and I think we all expected this, that it would be a very short-lived rally. Over the weekend, we've had a lot of announcements. One of the biggest announcements and concerning to the market is the Fed slashing interest rates. So right now we are back to where we were several years ago. We're down to that 0 to 0.25% interest, which there are some good things that can come along with that. But what we're going to experience in the short term, not really super excited about that. So I just want to talk about some of that. And also at the end of this, I'm going to share some of the things that I am not buying and also some of the things that I am buying. So stay tuned for all of that. But going to my screen here, and here's one of the things we see is the Dow Jones. Dow Jones, gosh, that's ugly. Down 2,997 points for a percentage drop of 12.93%. And just looking at a nice little Dow, a CNBC article, just kind of says it all there right now. For those that aren't following me on Twitter, be sure to check me out at @JJeffRose. And this was a tweet that I put out just a little while ago. I don't know how many of you have seen the movie, Jim Carrey's movie Liar Liar. That's one of my favorite movies. A scene there just really encapsulates what happened with the market. Because I think the last time I checked, we were down about 1,800 points, and we just lost about 1,100 points near at the close. So yeah, so we've got all that going on. If you hadn't checked out my last videos from last week, I still feel it's going to get a lot worse before it gets better. And does that mean that I think we're going to hit the 2009 level, March 2009, where the Dow got down to 6,500? I surely hope not. But the reality is that, can it get back to the 2007 high of 14,000? Yeah, I really think that it could. And if you look at percentage-wise, the S&P was down 38% back in 2008. That would put the Dow Jones at around 18,000. If we were to look at the percentage drop from the high of 14,000 down to 6,500, that was a 54% drop over the course of, I think it was like 17 months. So, we're not there yet. And right now, with all the uncertainty going on in the world, I definitely do not feel that is a crazy, irrational belief or thought that could happen. I did want to highlight an article here. So read this over the weekend, how to keep your money safe as markets panic over coronavirus. And, there is some general stuff that they highlight here, but, there's still, some decent things, and really kind of playing along with the drop in interest rates, what's going on there, which I'll highlight in a second here. But I did want to highlight this. I'm going to go ahead and enlarge this real quick. I thought this was pretty interesting, but just showing different epidemics that have occurred, over, going back, I guess, to 1981, going back to the HIV/AIDS scare. And it shows here, like, the longest duration, that we've had, just with the market correction and looking at a bad market, like going back to 1981, it actually is the longest. It was 5 months. All the other things that probably illnesses, viruses that we're familiar with SARS, swine flu, H1N1, is it Ebola? Ebola, just some of those, like, I can remember, we didn't really have a lot of effect, there. And then I love seeing this, what was the market return after, those different epidemics that released. And, we see some pretty nice returns, 36%, 29%, SARS back in 2003, 66%, 2 years after everything happened. The only negative there we have is the dengue fever back in 2006. In reality, that was just the timing, what happened with the mortgage crisis. So really nothing to do with that. I don't even know what that was all about. So that I thought was some pretty interesting, just try to put everything into perspective. Obviously this is a bit different, what's going on with all the school closings and everything that's closing down. But, just sharing some of the general tips here, what to do with your money during times like this. Invest for the long term. For those that are in, those that have invested, right now is not the time to cash out. I've said this time and time again. I don't want to spend too much time on that. For those that are asking me, what about if I have a 401k? Is this the time to invest? And if we are, I like how it says, contribute gradually. If you have a 401k and you still have a job, be grateful for that. But yeah, keep adding to your 401k. I was talking to a buddy of mine who moved, I think, about $10,000 into the market. I'm not really sure where he's invested. I actually think he's with Betterment. He moved $2,000 into the market. He said on Friday. I didn't get any clarification. Did he do that at the beginning of Friday or the end of Friday? I hope that he was able to get in at the beginning of Friday, which if he's with Betterment, I'm not sure if that actually worked out in his favor. Either way, we were just talking. He's like, yeah, I know I probably could have waited to see if the market dropped some more. And you still got in at a nice discount. Obviously the discount is even more discounted today. Nonetheless, though, if you are getting in right now, even if the market goes down even more, which I think it will, you're still buying at a very, very steep discount to where it was, a few weeks ago. So don't feel that, for those that are trying to wait it out, which I'll admit, I'll raise my hand. I am one of those waiting it out a little bit more, which I'll mention here in a second. But so if those that have a 401k and you're just doing gradual investments, if you're sitting on a big chunk of cash and you're waiting, I know there's no such thing as market timing, but I'm just kind of looking at what's going on in the world. I mean, there's still a lot of uncertainty. In our area, schools were actually just announced canceled up until April the 6th. So still things are so up in the air right now. And I'll tell you the one thing that market does not like is uncertainty. Market does not like uncertainty. And right now we've got a whole lot of uncertainty going on. All right. So that's one of the things going on. Doesn't really talk about, I guess some of the long-term, let's go to this article here, talking about interest rates. I mentioned that here at the beginning, the Fed slashed rates and, one of the things that you can do, and I don't know if this applies in your situation. I actually got a text from a buddy of mine who has a home and he was able to refinance his mortgage. And he was able to basically keep this payment the same, take $80,000 out, all because of seeing a drop. And I don't think that I don't know what his interest rate was before, but nonetheless, he was able to take advantage of what's going on right now. So this could be a time that if you have a mortgage and you haven't looked into refinancing, basically anything that you have right now, that any debt that you have, whether it be a mortgage, a personal loan, even an auto loan, could be your credit card debt, probably not student loan debt since they're pretty well sticking to their guns on what those rates are. But this is a time that you can look at possibly refinancing. Definitely companies rates are dropping. Basically it's one of those situations where it doesn't hurt to ask. Looking at your credit cards, looking at whatever debt that you may have. Picking up the phone, sending a quick email, and just finding out. Maybe it's just going on their website and starting a chat with their support line. This is the time. It's unprecedented, so it definitely does not hurt to ask and inquire. But mortgages, student loans, I haven't seen a lot of change on that. The only change I saw, I don't know if it was just for the state of New York, but basically they weren't stopping payments, but they were basically applying all payments to go towards the principal, not towards the interest, which I saw somebody tweeted and said that's not really helping. I'm like, that's actually a pretty big deal, that you're actually going towards paying off the principal. Do you love how my ad here is for StockX? Can you tell it's a site that I visit a lot? Gotta love those retargeting ads. Okay, that's just some of the general tips I want to share with you, what's going on with interest rates, the market, all that good stuff. Now I wanted to highlight some of the things that I'm not buying, also some of the things I'm buying, and one of the things I'm suggesting that you stay away from right now. One of the main things I'm not buying right now, and this is so strategic product placement, is behind me is some sneakers. Now, many of you are not sneakerheads like myself, but so these are some Nike Off-Whites. These are actually worth $500. I bought them on eBay. This was actually maybe to wear, but actually more of an investment. I was hoping to resell these for $300-400 profit for these. So, but right now, just thinking this through, I don't really think that a lot of people are going to be spending a lot of their extra dough on premium sneakers. Yeah, there's going to still be some that are still willing, but I've got several right now that I'm looking to sell. And right now, I just don't really feel like adding that to my inventory. So that is one of the things that I am staying away from right now. So one of the things I'm not buying, and trust me, that's hard for me, but my wife and I have been talking. She's like, maybe just right now is not a good time to increase your shoe collection. I'm like, all right, babe, I'm with you on that one. One of the things that I am buying is oil, and not like actual barrels of oil. I don't feel like I'm going to be storing any oil in my house or anything. But right now, what I'm showing you right here is the ETF OIL. This is through Barclays and iPath. And right now, at the time of this recording, at the end of market close, it's trading about $6.02 a share. And I mean, you can see the plunge that happened pretty much last week. And I'm not looking as this as like a short-term play. I don't think that oil is going to spike up in the next 2 to 3 months or anything. But as you can see, just going back earlier part of this year, we were at about $12. Going back to last year, anywhere from like $13, a high of $14, I think $15 or so. Yes, it has been lower going back to 2018, but I do feel eventually, this will come around. So this is more of a long-term play. Don't know exactly which account I'm going to be purchasing this in. For those that are following along, I got my M1 Finance account, which is more for long-term growth, which makes more sense. But I've got more cash in my Robinhood account, which is meant to be more of a dividend play. I'll be letting you know whenever I make that decision. I have a few other stocks that I'm looking at. I'm still not ready to move in. For me, I'm kind of looking at that Dow Jones in the teens. 18,000 is kind of like the number I keep telling myself is like when I'll start moving in. I do feel it will potentially get lower, but I don't want to feel, I'm not going to be able to time it. So I feel like that's a pretty good time to start moving in, not just the money I have in my M1 Finance Robinhood accounts, but also some other cash I've got sitting in other accounts as well. So that's kind of what I'm looking at. One of the things that I feel like is a thing to stay away from right now is Lending Club. And this is an investment that I've talked about in the past. Just so that we're on the same page here, I'm not selling my notes. I'm not looking to get out of my notes. I'm just not looking to add any more money into this. And I'm actually going to stop the reinvesting into purchasing new notes as well. So any dividends or interest that I make from people paying back their notes to me, I'm just going to go have it and just sit in cash right now. And I don't mean to be fear casting here, but thinking about, what is Lending Club, peer-to-peer lending. I mean, these are basically personal loans that people are getting. And when a lot of uncertainty is still going on, right? So with people's priorities and things that they're paying off, they got to pay their rent. They got to pay their electricity. They got to buy their groceries. They got to pay their internet, especially if they're working from home. And for necessity's sake, they got Netflix, they got Disney Plus, Amazon Prime, like all the things that people are going to keep. And one of the things that are going to be first to go is stuff like this. Now, obviously, it's going to hurt their credit, but I mean, at times like this, people don't care about their credit. They just care about their well-being and be able to stay in their house or their place and be able to live the life the best they can. So that's just one of the areas I feel that is going to be taking a hit. Now, I hope it doesn't play out, but nonetheless, I just feel like that's going to be an area that's going to get hit. As far as an area that I have talked about in the past that I still think is a good option still is Fundrise. So now we're looking at an online real estate investing platform. Now, as far as liquidity goes, don't be putting money into this thinking that you're going to be able to cash out because Fundrise does have that ability to prevent people from liquefying, their investments inside Fundrise. But going back to that whole model, once again, not the model, but just the belief that now Fundrise has a diversified portfolio. They do have a lot of commercial real estate, which obviously could play into the economy, but also they have a lot of residential properties and people paying rent. Like, yeah, they could be late, but nonetheless, I mean, people are going to do what they can because they don't want to be on the streets. They want to be able to live in their place and get their internet and watch Netflix. So that's why I feel like Fundrise is one of those, I won't say they're recession proof, but definitely feel like comparing Fundrise to Lending Club, like I feel a lot more bullish, a lot more feel good with Fundrise. So that's one of the areas that I'm not saying I'm adding new money right now, but I will say it's one of the areas that I'm not as concerned about. But I am a little bit more concerned on Lending Club. So that's kind of what I have going on right now. As things start to unfold, I'll be sharing more as far as areas that I will be, stocks I'll be buying, other opportunities I'll be looking at, and all that good stuff. So really appreciate you. Hope that this is some value to you. If it is, be sure to hit like, subscribe if you haven't, share this with anybody else that might need to hear this. And also just got to remind you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.